All right. Um, actually, I'm happy we did this Thursday instead of Tuesday because Tuesday was like pre-CPI, and yeah, not much to talk about before then. But there's some stuff to talk about today, definitely. No boob sweat, no jarred farts today. Okay. Anybody who tries to lure me into that convo gets banned. We take the day off from that. All right. All right. All right. I wish I had time to plan it out so I can go things in order, keep it in order and organized here so we can look at a few things. All right. We have really interesting what's going on. Again, I like to rewind just because not everybody's a member, just to get everybody caught up, and then take it to where we are now. And then, obviously look forward, try to get a handle on things. We talked about the reasoning behind this move, right? As hard as it was to believe at the time that any positive news would surface, right? Forget the price action. Even with positioning the way it was, you all aware of what the problem was for us, right? There was a good possibility, high odds that some sort of low would be put in. We could trade off that. We can play off weakness, buy dips. The problem was trying to get a gauge on the upside, right? And the reason for it was anytime we had a similar setup throughout this bear cycle, right? And the one similar to the one we just had was back here, okay? What put an end to the squeeze was not necessarily a reset in positioning per se, okay? In other words, wasn't the problem didn't get fixed that created the squeeze. What put a halt to the bounce, to the rebound, was the Fed. Okay, the Fed, in their goal to take down inflation, could not allow risk assets to appreciate in a meaningful way. It defeats the purpose, right? So that's kind of what happened back here. And, we discussed throughout many of these webinars every week of how, we talked about how, when did we all come to the realization that the Fed, like, when did we swallow that pill that the Fed was rigging the game, right? And I stressed to you guys, like, right here, that's where it dawned on me, right? That's where I was looking for constructive signs and things that should have looked and acted differently at the time, and they didn't. And that's when it really dawned on me that the Fed was going to go through this process, okay, and rig the game to the downside. Right? We all know they love to do it on the upside. A lot of us didn't think they would go through with this on the downside for as long as they have. Okay. There was chatter, right? We're calling it conspiracy theories now, that they may be done. Okay. They've had enough. Now, again, we don't know how true that is. Time will tell. But that's the chatter out there. Okay. So basically, again, going in reverse to get to where we are now, the problem wasn't that offside positioning and lopsided sentiment wouldn't be able to hold things together in a sense. The problem was, what would be the risk reward? Okay, even though the lows might hold, where does this squeeze top out? Does it top out here? Does it top out here? Does it top out here? There was no way of forecasting or predicting that, and you're probably saying, well, there's never a way. Actually, when we look at positioning, we get a pretty good handle on when that lopsided offside positioning kind of resets. So in other words, if hedge funds, CTAs, systematic funds, specs, we call them the riffraff specs, right, are all short and Sharpies are long here into these lows, okay, one of the things we look for is for those shorts to start covering, right? and get rid of that short position. Now, they don't have to go to all in long, especially in this environment, but at least not be net short, right? They get shaken out of that trade. And that's what the market does. And a lot of newer investors, traders fail to realize that as bad as things get, when everybody's aware of it and everybody's positioned and looking for it, 9.5 out of 10 times, the market's not going to go through with it at that time, right? Oh, I see him. He's on CNBC now. That's our boy right there. So one of the things we can look at, right, without the Fed involved, we can say kind of what we're looking at now. Are hedge funds still short? Are CTAs slow to react to this squeeze and are still short, right? Are the riffraff specs still short? If that's the case, the likelihood is this bullish phase has more room to go. Now, that doesn't necessarily mean upside in a straight line, but what that tells us is even, let's say, if the highs are in for this move, we still can buy dips. We can still hold on to long exposure if we're currently holding on. So that's what we usually have to gauge this sweet spot setup that we like, right? Because these type of setups, they don't come around often. Like the setup we had here without the Fed involved is a rare setup. You see it usually at the market bottom most of the times, or some sort of intermediate low at the least. Okay, that's how strong of a setup or positioning that was. All right. So what we have been doing, right, and a lot of us have been taking a different approach here. Instead of holding on to long exposure and trying to get a gauge on how long we should hold, right, we're trying to keep tabs on clues on whether the Fed, right, is not only going to start rigging the game and tightening financial conditions again, but when they, if and when they even start to do that, right? So we've been looking at, and you guys, if you've been on this webinar, or obviously if you've been a member or even follower on Twitter, there were several different indicators to look at as far as financial conditions, whether they're tightening or loosening, right? That we look at. Credit spreads are a big proponent of that, right? You see a lot of times I post that CDS or CDX, it's actually called, that CDX chart. We'll look at it again, right? When credit spreads are widening out, it's almost a mirror image of the inverse of the S&P 500. Every time credit spreads widen out, the S&P 500 sells off. Every time credit spreads tighten, the S&P 500 coincidentally finds a way to rally, right? So it's no coincidence, right? It's the Fed behind it all, right? So what's been different here, okay, but similar to this squeeze back here, the real one, all right? But what's been different about this move compared to some of these other little squeezes, the Fed rigging process, their tightening process, right? Tightening of financial conditions have been MIA, okay? And what I mean by that, if you remember back here, what happened literally into this high here, the Powell sent out all his soldiers, right? The dovish of Fed members came out and sounded as hawkish as you ever heard them in their life. It literally scared the shit out of players in this game, how hawkish some of these doves were at the time, right? So the Fed started talking down the market, and behind the scenes, you can see that financial conditions were aggressively tightening, right? So think of it as the opposite of what they've done in those bull markets. They're draining liquidity. Rates are rising. The dollar is strengthening. Credit spreads are widening instead of tightening, okay? This all goes, when you hear Powell say the only tool the Fed has to use against inflation is tightening financial conditions, right? If you paid attention to any Fed presser, he's mentioned that numerous times, right? So what's been MIA up until this point, right? We saw a tiny bit of it today, and I wouldn't call it aggressive today, but today was the first time we we saw any little signs of tightening out there. The Fed tightening mechanism, right, has been missing in action throughout this whole rally. And a lot of us, we didn't know when that would show up, right? We were talking, if you remember, on a couple of webinars in the past, we were thinking here, right? A couple of us thought maybe upside 42, 4,300, right? That's a lot of you people, a lot of you guys on here agreed with that, right? Bova, Hartnett, reputable, credible analyst on the street, his target 4,200, 4,300. So that was like the max upside, and that's where we are right now. So it's an interesting spot here to really just basically do the same of what we've been doing here, is to keep an eye on, one, how does the positioning react, right, to whatever price action we get? And more importantly, okay, because I think it's going to tell us bigger picture whether this may have been a major low or not, is how does the Fed and the whole Fed rigging process here, how does it react, and what kind of impact it has on financial conditions, right? So, and we'll look at a couple of charts, but that's where we're at here. As far as positioning is concerned, right? Let's breeze through that quick, and then we'll talk about financial conditions, because honestly, I think they're even more important right now. I really do. But let's look at a couple things on the positioning side quickly. Was he really? I love Tony P. He's like my half brother. He takes the words out of my mouth every time. The guy steals my gig. Where are we? Okay, so this is out of TD, right? They got a cool setup here where you, on a day-to-day basis, you can get a glimpse of how CTAs are positioning, right? Now, CTAs, again, not to get too market technical with some of you guys. Again, I don't like to use the fancy words and all that shit to make me sound smart, because I'm not. But think of them as systematic funds, okay? When they're buying and selling, or when they are, better yet, the way you put it, when they're raising exposure or risk levels, right, or decreasing exposure and risk levels, okay, they're not doing it based on emotion like a lot of us, okay? They're doing it all systematic metrics, right? Where's the VIX at? Where's this at? Where's that at? And that's how they determine how much exposure they should have on, either on the long side or the short side, okay? So recently, because of the market conditions, because of an elevated VIX up until obviously this rally, they've been net short across the board as far as on the index level, right? So you can see that right here. Let me get my little fancy pen out so I can pretend I'm John Madden right here. See this? Boom. Okay. So it tells us, and for example, like on a day-to-day basis, we could see, right, a day ago, short 8%, no change from yesterday, right? They were up to, I think it was around 20%, I think it was. So little by little, they've been decreasing their short. Now, you guys will like this better. Here's what it looks like in chart form, okay? So you see, when things are bullish, they obviously are going to have a decent exposure, right, as far as the long side is concerned, okay? When things get dicey, no thought, no emotion, they take down their exposure. The worse it gets, they're trend followers in a sense, okay? But they're always late to react. And not only that, okay, because trend followers you probably know a few of them that are successful as a whole, okay? So I'm not knocking trend following, thinking they're just an insta fade, right? What I'm saying is they not only follow trends and do systematically, they make a dent in the market when they need to scramble to adjust exposure, okay? That's why it's important to look at these things, right? When they are sitting on a short position like this, right? and something changes and they need to go from short to long, almost always you're going to see the results in the price action. Okay, because more and more, you guys know, right? You hear about it's all robots, all machines, all programs. It's more and more systematic trading out there. I know you see all these sweeps and everything going on, all these orders flying all over across the board on a day-to-day basis. You think there were human beings processing these orders, pressing buttons? Obviously not, right? So these guys, you know, are major players in this game right now and have a significant impact. All right, so you can see on the last big squeeze here, right, where they went from not as much as this to go around, but they went from long to short. Okay, you can see the impact they had on the market there as well. And then they had to flip short to long, right? You guys remember this squeeze? It was a monster. Okay, so now they've been sitting short here, and this is what they look like coming into today. They're somewhere, where are they? Right over here somewhere. Why do I have this green ugly font? Hold on a second. Okay, so they're right over here somewhere. Okay, so, and here's the importance of where we are now. Okay, at the least, what usually happens, even in the, if we're in a worse bear market than 2008, likelihood is these guys will get to at least the zero line, if not have some sort of long exposure, even if this is the worst bear market since the Great Depression before it heads south. Okay, that's what usually happens. Okay, at market bottoms, right, we see these guys end up net short and the market keep going until they're all in long, right? From market bottoms. Okay, but again, don't jump the gun here. At least wipe out a short position is what usually happens in bear markets. All right, so that's what we're looking, that's what we've been looking at and looking for recently, and we're going to keep an eye on and see how much further this goes. Supposedly today's number, what was it, the 4,200 level, around there, was a big number according to them, where they would take exposure up. They probably did, and then got run over in the fade. But maybe come, you know, tomorrow we see their long. Is very possible. All right, but this is the stuff. The reason I'm bringing this up first, this is the type of positioning that we were looking at that told us at the least these lows, again, even if it's not the low, these lows should at least hold until some of this positioning resets. Okay, another big crowd, right? It's not just them. If it's just CTAs, it's one thing. You have these guys. Right? And we all know them. We talk about them constantly. Hedge funds. Okay? Same thing. All right? They were net short. Here, here's the zero line. It's tough to make out here. Okay? Oh, the green line's there. Okay? That's the zero line. So anything above that, hedge funds as a whole have exposure to equities, right? Anything below that, they're net short as a whole equities. Okay? And you could see the last round of selling that we had into that low, right? They got a bit more aggressive than they did throughout this whole bear market, right? They were almost reluctant to get short prior to this low. Okay, you see how they danced, boom, went net short for a day, then bounced, and right? They were almost like nervous about getting net short. Okay, here they felt good about getting short for good reason, right? The Fed was rigging the game for good reason, right? But there's no easy money. There's, like Drunken Miller said in that interview, we talked about that a gazillion times, right? He's bearish, but he knows better than to short into these lows right now with everybody and their mother, All right. He may not be able to get bullish, but he definitely can't short this right now. Right. You heard him in the interview. And that's why, because everybody was short into this low. All right. So you see here, that's where they got squeezed. And now this lags more than the CTA reading we get. But as of right now, it's not that big of a lag. I think it's a couple of days. They're right here. Okay. So in all likelihood, you're going to see something like this. Okay. It may have happened already. Honestly, we saw a little bit of it today, and it really looked like shorts capitulating this morning. All right. And you see what's been going nuts. Like, listen, Apple's had a hell of a move. Some of the big guys have been great. But have you seen some of these heavily shorted names, what they've been doing in recent days? Right? Bonkers off the lows. Yeah, crazy. Now, mind you, these stocks have been annihilated, right, from their highs over a year ago. Annihilated. But shorts never had to almost, they were sitting comfortably short these names for months, right? They never got shaken out. Very little, if any. Okay, this was the first real squeeze that made them feel some pain and made them feel uncomfortable to the point where maybe they decided to cover. And that's why you're seeing these crazy moves in, let's be honest, the dog shit of dog shit out there, right? A lot of these names aren't going to be around when things get better, let alone rip and roar like they have over the past couple of weeks. All right, but the reason why they're doing that is because it's a bear market squeeze, right? We're talking about shorts offside. And where do all the shorts live, right? They live in these names, again, for good reason, okay? So that's why these names have almost even led the last few days and have had crazy moves, all right? So this too, we should see something at the least similar to this, all right? And that's what we're looking for, and that's what we've been seeing happen. The process starting anyway. All right, and even more so than anything else, which is crazy. Let me pull this up. In the futures market, oh no, I can't. Oh, here it is. In the futures market, the positioning is even more lopsided. Right. And that's why Sharpies, commercial hedgers, have taken the other side and have a massive long position, right? Because all the spec money is up to their eyeball short. And you know, some of these charts you could see here. I mean, look at this, right? Worse than even COVID lows. Look at this. Okay, so across the board, again, we talked about this, but you guys got to understand, no, all the time, and we're going to be shocked and surprised by the magnitude of these moves every time, guys. We're never going to get to the point where we're not shocked by how violent some of these moves are, okay? Because of, again, all the programs, machines, and things tied to the VIX and this and that. These moves are going to get more violent each and every time they happen, right? So they always seem to surprise us. But what we shouldn't be surprised by, okay, is a reset in positioning and sentiment, all right? It was only a matter of time before the process had happened. And the question was, you know, how violent and how powerful a move would it end up being? And was it worth, you know, getting aggressively long ahead of, right? Now, in hindsight, we all wish we got aggressively long, right? But if you told me back then when we had this conversation that the Fed tightening cycle was going to be pushed to the sidelines for whatever reason, obviously I'd be singing a different tune, right? But the big fear was that the Fed can do what they did back here, right? Or even sooner, and because of inflation, need to keep the rally in check and need to keep things tight, right? So again, the magnitude of the move, the Fed being MIA, that's all surprising, but the reasoning behind this move shouldn't surprise any of us, okay? And you know what's interesting about this game, and you guys will realize this just from experience. Down here, it looked like there was no good news possible, you know? That even if we rallied, it'd probably be on bad news. It was almost impossible to see some good news, right? But you see how somehow, some way, right? The CPI ends up favorable, the PPI ends up favorable. All of a sudden, all these little things, the rhetoric gets bullish in a sense. And that's what reels people in. And that's what gets these bears to flip, right? It's the not only the move, it's the bullish noise behind it. All right. So that's where we're at right now. Now, what would be ideal for us to see here? Okay. And again, forget about levels and are we at the bottom or are we not at the bottom? I have no effing clue. Okay. I have no idea. Okay. But what we want to see and what's likely to happen, all right, and it's likely going to happen come September because that's when it usually happens. The backdrop and the noise, okay, is going to go from good to bad to hideous. Okay, that's what's likely to happen, right? We're going to start to see the impact of the Fed tightening cycle and the impact it's had on the economy. We haven't seen shit yet. Jobs are strong, right? The only thing we've seen is the good. Inflation coming in, commodities coming in. We haven't seen much of anything besides a little slowdown in the housing and manufacturing numbers and stuff like that. We haven't seen anything as far as scary on the economic side. And what we should see, and especially if this is the low, okay, we should see the news get negative, all right, but the price action act better, okay? The flow look better. All the stuff that I wanted to see back here, okay, based off the positioning squeeze, right? I'm going to be looking for the same thing here. So in other words, when we started coming down here, right, if this was the low, and if the Fed was done rigging the game, we would have seen buying, right? We would have seen sweeper activity in there. We would have seen names outperform, right? We would have seen bad news in names and they go red and they buy them up and they hold up and stuff like that. So you start to see constructive price action. You start to see constructive flow. You see those sort of things while the backdrop in the news is really bad and getting worse, right? So that's what, again, we're jumping the gun here, but come the end of this summer into September, October, which are notoriously rough months to begin with, especially volatility-wise, what we should see is the news start to worsen, right? Get worse. And we got to look for buying into that. See, what happens now, the problem with, there's some buying out there, right? There's a lot of buying, especially in short-term strikes as far as calls are concerned. But I just showed you the reason why we're rallying is because players have no exposure. So the reason why we're seeing that buying, it's forced buying, right? Players are caught underexposed and need to put on exposure in the quickest possible way. And the easiest and fastest way to do that is to buy calls. And that's what we see. That's why we see call buying in all of these names that are squeezing hard across the board in weekly and front month strikes, right? The real buying that we're looking for into weakness, we're not seeing a lot of that, right? There are a few names, BTU, a coal name, a commodity name, right? Today we're seeing energy buying, as far as the real buying is concerned. Like we're not seeing risk on in any of the real buying. Okay. And that's fine. If we start to see that, right, that's what we discussed recently. Maybe we can look towards names to find some alpha and not even worry about the markets, even if they're choppy and a mess. All right. So we're okay with that. But what we're not okay with is relying on the type of action we've been seeing up until now. Because again, the stuff they're buying expires in a week, right? These aren't funds building positions in names because they think the lows are in, right? These are funds that they're underperforming and need to take their exposure levels up. So they have to gobble up calls just to put on exposure. I remember, what's his face who does this back, Shamath, right? He was talking about one time he was caught off sides and he needed to get on, he needed to protect not just equities, everything, all of his investments that he was holding. And he said he spent 3 days, just sweeping puts in the option market to put on as much protection as he possibly can, because even while doing it, he didn't know if he had enough because he was caught offside. You understand? Got caught with no protection, no hedges on. So that's what we're seeing right in front of us right now. That's what we're seeing, just the opposite. They're caught short, right? Even worse than underexposed, they caught short, and they got to hedge that risk. They got to hedge that risk. So anyway, the things that I'm keeping an eye on, and again, it's nothing different that you haven't heard on prior webinars, right? One, I want to see what the hell the Fed's doing here, right? Because if what we're seeing up until this point, right, and I think it's a little too early to assume that this is the case, right? It's early, so if it goes on for longer, then it's a different story. But it almost looks like the Fed already pivoted and announced QE. All kidding aside, it almost, I can't say it looks that way, it feels that way, right? And this is what I mean. Okay, these are the credit default swaps, right? Again, nothing new to anybody who's been on this webinar. As these credit spreads widen, meaning there's more risk, default risk in companies, right? This indicator goes higher, and you see the S&P 500 trade lower. Almost a mirror image if you overlay them and inverse one of them. Okay. What a coincidence here, right? The sentiment positioning squeeze starts, and this is the longest downtrend we've seen in this whole bear market cycle, right? And it's the strongest squeeze we have. You think it's a coincidence? It's credit spreads are acting. Okay, the reason why this does this or has been doing this is because the Fed has been aggressively tightening financial conditions. And by tightening financial conditions, the probability, the odds of companies going bankrupt and defaulting goes up, right? The reason we didn't see any bankrupts throughout COVID was why? Because the Fed put, right? Otherwise, how many companies end up having nothing but headaches coming out of COVID? The whole global financial system shut down. Okay. The reason why we didn't hear of any is because the Fed threw in the kitchen sink on top of fiscal stimulus and everything else. Right. So now the Fed's doing the opposite. Right. Credit starts to tighten, things like that. So the odds of default go higher. Okay. And that's what this tells us. What's been happening now, all right, and it doesn't usually happen. We looked at, if Lulu's there, we looked at in the room today, we looked at 2008, and there was a bear market in 2008 that looks a little similar to this up until this point. right? A little similar to this right before the big one. Okay, again, I'm not saying that's going to be the case. I'm just saying that in 2008, there was a bear market rally that looked similar to this, even in credit default swaps, before you know the rest of the story. All right. So obviously, I want to look at I want to watch this like a hawk, right? Because not only the weakness, right? If we see weakness and we see this still sitting here or even improving, we want to buy that weakness in the price action in the equity market. You follow? You understand? Let me repeat this so I don't confuse you. If the S&P 500 trades lower over the next couple of weeks, right? And financial conditions don't tighten and or even loosen, right? We want to buy that pullback. We want to buy that dip. Okay? Because one of the reasons they may be improving is because the market's pricing in the Fed getting easy. I can't believe I'm saying this. You understand? Not tighter, easier. Okay? Again, I can't even believe it's coming out of my mouth this early in the cycle. And listen, it may not, still may not be the case, obviously. But what I'm saying, exactly, T, that's why you got people, the conspiracy theorists out there. And I'm not going to lie, it's been running around in my head, okay? Everyone's scratching their head saying, what the fuck is going on? What's going on here? The Fed comes out every day talking a big game, and financial conditions continue to loosen, not tighten up. You understand? That's a great point. Somebody brought that up. And T, I don't know if you saw that, what Lourdes just said, could be for the midterms. Maybe they're just doing this, right, to loosen things up because things were getting aggressively tight and the economy would look like a shit show in another month, right? So they just wanted to take a step back and let it breathe almost. Certainly possible, okay? But even more so the reason, Trey, why we want to keep an eye on this. You understand? What I'm saying is we don't need to guess because we're all lost in space. Everybody is. Everyone's scratching their head, okay? Only the Fed knows what they're doing. Maybe Sharpies, for Christ's sake. You know what I mean? We will never find that information. We will never get access to that. And Nancy. Okay? So what we got to look at this stuff to be able to pick up on the clues that either the Fed's coming back doing their thing again or they're done. Right? And if they're done, we want to buy dips, especially, okay, if positioning remains as light as it is. You understand? Because that's an added asset, right? Especially if positioning remains as light as it is. So as simple, and again, I don't want to make it sound too simple, but if we get weakness and you see this, well, this was pretty aggressive, right? But you see this, right? Where this thing is starting to curl up and looks like it's getting ready to break new highs, right? Almost like a stock chart. We don't want to buy that pullback. Okay, we don't want to take the chance and buy that pullback, even if it stops there and goes lower. Okay, because what usually happens, right, when the Fed comes in, the Fed put, you know what happens to this? This thing goes. That's what happens. Okay, when the Fed put comes in, this thing has a tight, significant downtrend, okay, without a almost like any uptick gets sold in this I'm talking about, and just goes all burns to the ground. Because the reason it burns to the ground is the Fed is rigging the game. So default risk goes out the window. You understand? So this is something we want to glue our eyes to, right? The stuff we look at intraday, again, gives us a good idea of, we don't want to get too cute with it, but on an intraday basis, what the hell did I do here? What financial conditions look like, right? All the stuff we look at, and I know not everybody's a member, but for the most part, all the stuff we look at, especially if you're members, you just want to be aware of where these things are at, because they're going to determine whether dips are buyable or we got to move out of the way. I think it is that simple. And listen, like right now, for example, okay, right now you got a rip here, right? Now, for me, and I'm sure a lot of you would agree, okay, as far as on the index level right now, you don't want to chase this here, right? You definitely don't want to chase this here, okay? So we're going to be looking for any weakness, right, for opportunities, even if it's in names. Right? But we want to make sure, all right, that if we're looking for opportunities into weakness, that we're not looking for those opportunities into the Fed rigging the game again, right? And I mean, let's be honest, even if it's the midterms, I mean, how much easing can they allow to go on with inflation where it's at? I get it. The CPI was better than expected today. Fantastic. You still have inflation, elevated inflation out there, Yeah. And that's, listen, a lot of people out there, and one of them is talking to you right now. I didn't think the Fed had the coconuts to go through with this process in any sort of aggressive way at all, okay? I thought they would start to tighten, okay? As soon as a couple of PMIs came out that were weak, they would hit the brakes because they were too scared to put the economy into a recession, right? Especially in the midterms and all that coming up. I didn't think they would do it, all right? But I was wrong. Like a lot of others, I was wrong. But I had to admit I was wrong. Otherwise, if I'm buying this weakness, I would have got mutilated, right? I would have got mutilated. So that's same thing applies here in a sense, almost the same thing. And, obviously there are other things that we look at that are all, I think, worth watching right now. Sharpies, we thought this on the first go around. Maybe it's this go around. Maybe they know something we don't. Maybe they know something about the Fed that we don't. I still think a lot of this has to do with positioning. Okay, in other words, the other side, the speculative money, was just as aggressive on the short side. They weren't a couple months back into that squeeze as aggressive, right? So these are commercial hedges, right? We call them Sharpies. Okay, this was the first go around here. And if you remember, it came into the squeeze as it was happening. But as soon as the rally topped out, you could see, right? They took off whatever net long exposure they had, and they dipped a little back onto the short side again, right? Here, they just keep pressing away. Now, what's different, okay, let's take our conspiracy theory hats off. What's different is, where are they? Probably in this thread somewhere. Where's John? See the clown emoji? These guys? That's what's different. Look. See? They took pretty big dive here on the short side. Right? almost similar to what they did into the COVID bottom, right? They got a little short here, got a little scared, and then dipped again, and they got run over. Yep. So, and here's the thing. This market has been lifting. Now, this is delayed information by a couple of days, all right? But this market has been squeezing, and they haven't budged, right? They haven't budged. They're still literally all in net short coming into this week. So we'll see tomorrow if they got shaken out of their position. Let's see. And what Sharpies do, right? What the other side, the smart money does, if they did get shaken out, it's going to tell us a lot about whether this was just based on positioning or if they think the Fed is up to something fugazi. So anyway, the moral of the story, guys, is that no matter what, right? This squeeze was set off positioning being so lopsided, right? An extra catalyst, right? If you want to say an extra kick to the squeeze, was that the Fed tightening rigging cycle has been MIA, all right? But it should be showing up here. It should be showing up here. If not, something's changed. Something's changed. And, we don't want to be stupid about it, right? Let's say it's even midterms or whatever cockamamie reason. Maybe, a lot of people, I think it was, again, Larry McDonald, who said the Fed looks Satan in the eyeballs, right? They were tightening so aggressively that the economy, if they continued on that path, would have been in shambles. So they had to chill out. Not only our economy, the global economy, that because of the dollar strength and everything else, you would have had countries default, right? Maybe that certainly possible. But I think time will tell. I think time will tell. And I think for us, I think it's a good thing because I think, right, we see weakness, right? If we see legitimate buying in names we like into that weakness and the Fed's not rigging the game, that's an edge we have to, okay, these dips are buyable, or if you're looking to short, these dips, you don't want to short into this weakness, right? I think it's a good compass to have. The only problem with it is we can't look out far enough. But I think that's a problem right now that everyone's got to face. You know what I mean? I don't think you can solve that problem where we could say, comfortably, we don't have to pay attention to any of this stuff anymore. We're not there yet. We're not there yet. We could get there, but we're just not there yet. Yeah, and look at like rates, right? I mean, rates have plummeted. Again, reason why these high growth names have seen a massive short squeeze. But let me tell you something. From my experience, okay, unless the Fed implements QE, and even then, it's hardly ever the crap that leads the new bull market out, right? They may squeeze for the first week, but then there's a transition where during the chop or whatever the price action is, these stocks lose all their Momo and players are looking for real names. It's not the garbage that rips and roars out of lows of bear markets. Those are usually bear market rallies, notoriously known to be a bear market rally. When all the big money flees, real estate equities will fly again. What are you saying, Dominic? When real estate market, when that shit hits the fan there, the money will come into equities, you think? Unless, unless it's a la 2008 again. Yeah. I mean, real estate, and you see like real estate too, and we're Struck's in the game. He knows what's going on. You had mortgage rates rip higher. You had, prices, especially in the hot areas, come down, right? Bill, we were talking about this the other day where, things were getting a little too, it was moving a little too rapidly where now it paused, right, Struck? Yeah, right now you had mortgage rates chill out, right? Prices have found the floor, okay? At the pace it was going, it was on the verge of getting crashy. Yeah, the thing with here's the thing with inflation, the and again, I don't know how much we can believe it, but the thing with inflation, the last thing the Fed wants to do is repeat the mistakes of the 70s again. And you probably heard that line been said on TV or whatever. And what that actually means, they don't want to tighten, raise rates, have inflation ease and cool off, basically declare victory, and then inflation starts setting off again, and they got to come in and get aggressive again. What they rather do, even if it affects the economy and creates a recession, they want to put the dagger in inflation, kill it, and then worst comes to worst, then we already know what they can do to get things rolling again as far as the economy if we're in a recession. All right? But inflation is their worst enemy. It's their worst enemy. It's their worst enemy. That's why a lot of people don't think they can play games and allow what we're seeing right now happen for too long. They can't have Bitcoin start flying again, right? They can't have all this speculative money start flying all over the place again. They can't, because it's inflationary. You understand? It's inflationary. That's the last thing they want. They want, if they can have their way, right? We spoke about this how many times, is they want exactly what's been going on to continue to go on. Okay? Exactly this. This is, and believe it or not, guys, a lot of people, don't let them fool you. All the Fed bashers didn't even think they'd make it to this point. Okay? The Fed has a shot. I probably just jinxed the shit out of them, but they have a shot at the ideal scenario here, where they don't crash the economy and inflation dies. They have, it may be a small shot, but nobody gave them a shot. This bought them some time, right? Soft CPI, right? A little breathing room so the economy can breathe a little. Now inflation starting to weaken a little. So far, so good. They got to be ecstatic with what has taken place. Nobody has gone through the windshield yet. Usually, there's 5 people through the windshield in the car by now. Nobody making money on the short side, right? Like, you see, and you guys, that's what I tell you, you guys get frustrated as bulls. We're not this here. I told you guys, I'm not even shooting flowers up your rear ends, okay? This type of cycle, the majority of us, okay, we're supposed to survive this, right? Survive, right? And that's what we've been saying, play tactical, trade, right? Have a little fun, enjoy yourself, but don't get banged up. If, God forbid, you come out profitable out of this disaster, you hit the lotto. right? So you're supposed to survive this. Bears are supposed to feast off of this. They're supposed to feast off of these environments. Think about it. In bull markets, they can't do a damn thing. They get destroyed. So if you're a perma bear, you're a lot more frustrated, and should be for good reason, a lot more frustrated than the bulls. But as a bull, you don't want to get too cute. You don't want to get too cute. We get the FOMO and bites us in the ass. Because the other thing is, right, and you guys know, you don't have to nail the low. We all want to nail the low, okay? We would love to nail the low if it sets up that way. But you don't have to nail the low to make money in bull markets. You don't have to. You know what I mean? You don't have to. But I think this is here's my gut, I think, and I call me a little I want to use the right term these days, right? But I don't have the coconuts, right? Certain terms, like I've been labeling this more of a quote unquote bullish phase, like a little sissy Mary that I am. You know what I mean? I didn't want to, because not knowing the potential magnitude of a rip here, but I think this bullish phase can continue for a bit here. I really do. Okay. It doesn't, and that what I'm saying is it doesn't mean that level wise we have to go higher. What I mean by bullish phase, and I think a lot of us would like this even better anyway, if we get a pullback here, okay, and we're not seeing the Fed rigging the game, and God forbid we're seeing flow, for Christ's sake, those are opportunities right now. Those are opportunities right now. And that's what I mean by a bullish phase here, okay? Even if it's within a bear market rally, you understand? Even if it's within a bear market rally, like there could still be time here to go before this is done. Yeah, there's nobody. The problem is, Ed, there's nobody long. There really isn't. Okay, there really isn't. The only thing that was left, and you guys remember, we talked about this too much, but you guys remember, the only thing that wasn't there yet for capitulation was the fund flows, right? And by the way, did you see the fund flows are back to average profitable again, level-wise? Retail, right. The passive retail money didn't capitulate. That's the only thing that's been missing. Where are we here? Yep, right here, look. Okay, so this dark blue line, you guys remember this chart, right here. Okay. Now this is, again, the passive money, right? These are not the traders, the tactical players getting short, getting long. These are investors pumping money into funds, right? Into ETFs. They're not active, moving it around. When they capitulate, in other words, when they sell, it's usually the bottom. And it makes sense, right? Because then officially, there's nobody left to sell. Think about that for a second. Hedge funds are short. CTAs are short. They're short in futures. And then you get fund flows, sell. There's no selling left. What are you worried about? What's going to sell? Who's going to sell? So that's why they usually line up with major bottoms. Here, this is the risk. This is the risk to any bottom call right now. Okay. If the economy does get a lot worse, if what the Fed has done already And think about this for a second, guys. You got to understand, not just the Fed, central banks as a whole, this has been the most aggressive tightening cycle ever, ever. Okay? Ever. So nobody has any idea how this turns out. Okay? Nobody has any clue how this turns out. We've never seen anything like this before. Not even close. All right? So if it does have a significant impact on the global economy, like a lot of people think, chances are these guys are going to get spooked out. Okay? And if they get spooked out, that's a lot of selling that's going to come out. You know, that's a lot. That's the risk. That could be the trip to new lows. You know what I mean? That's what, like Tony P, right? We told a buddy from Goldman. That's what he's worried about, right? There's a lot of good on the positioning side, especially tactically, but big picture wise, that's his main concern. You know, because he looks at just positioning, and obviously, you know, that's his main concern in regards to positioning. By the way, you guys could probably follow, certain of you guys follow this more than I do. Is it true, like, the Fed hasn't met their quota as far as QT? What they said they were going to do, or is that just rhetoric? Is there any truth to that? Because that's another thing, you know, people are throwing around alongside of everything else. They haven't, right? No, not QE, QT, the opposite. So the Fed was implementing QT. Remember, it went into effect. Now, is there any truth to that they didn't do what they were supposed to do? Slower pace? Yeah, because I think they do it that way anyhow. They don't do it all in one shot. You know what I mean? Because they don't want it to, they don't want it to destroy, you know, the whole enchilada here. But, you know, I hear that being thrown around by some people too. They actually bought, Robert, that's hysterical. No, that wasn't a coffee. Nice try. I know you wanted it to be. That wasn't a coffee. That was my cell phone. You probably just jinxed me now. So Cal, 30 billion, what are they supposed to do? Every month it's the same amount every month? Not even close, right? That's what I'm hearing. So again, I don't follow it as closely as a lot of people do. Some of you do. Yeah. Again, guys, time will tell, but what we're starting to see, and it doesn't mean too that stocks go straight up even if they're done. Because here's just to give you an example, but this could be a good thing. We don't want stocks to go straight up. We want to be able to buy weakness. You guys realize that? We want to buy weakness. We want weakness, but we want it to be buyable. That's the difference. Okay, look at this. Let's see here what I got. Oh, I posted a million of these things. Yeah, this is not what I was looking for here. I was looking for the other one. Where is it? Oh, money supply is on here. Yeah, M3. But I was making the point. You see how money supply topped out? We were talking about this. Remember when all the SPACs and the spec names topped out? That's exactly when all that speculative stuff topped out, right? When money supply rolled over, right? So now nobody was talking about it back here, but behind the scenes, the Fed was already draining liquidity, believe it or not. They were already doing it. And now we may be seeing the opposite. Now we may be seeing the opposite. Okay, we're not going to hear about it, right? Every day we got Cash Carry. One more time I hear Cash Carry telling me that there's not going to be rate cuts in 2023. I'm going to pile drive them, right? I mean, the guy's out every 5 minutes now. The biggest dove on the planet, Cash Carry. He's the god of QE, by the way, out of 2008. You guys don't realize that. He's the one who pushed Paulson and Bernanke and all those guys who were playing hardball to implement QE and everything else. The biggest dove on the face of the earth is an all-out hawk right now. Yeah, it's all part of their game, Tony. It's all part of their game. That's why, honestly, we can't listen to any of this stuff anymore. We can't. It's not worth listening to it because they flat out lie. They flat out lie. They're telling us how they're going to tighten and they need to continue to tighten. And what we're seeing right now is the complete opposite. No, he's not a hawk. Cash Carry is the biggest dove on the face of the earth. The biggest dove on the face of the earth. He can't keep a straight face. He got knocked because out of 2009, when the market bottomed, a lot of hawks wanted to start to roll back QE, and he didn't want to touch it. He wanted to keep it going, and honestly, he ended up being right. Well, right in a sense, on that, in those terms. But his philosophy was, if you don't see inflation, you keep printing, keep doing your thing, keep stimulating. So now we got inflation, and this guy, it's like he saw Jesus Christ. Yeah, I don't know exactly. I don't know about that, Cal, right? That's what everybody took. When they heard him, Cal, make that remark about neutral, being at neutral, that's when everybody said, oh my God, what's going on? You know what I mean? Everybody said, this guy, they're done. They're done. Right? They might raise in September and they're done. That's what everybody took it as. So, but the point is, we don't want to pay attention to that. We want to pay close attention to the facts. You understand? The facts will tell us exactly what's going on. And I think, honestly, I'm trying to find the right words, but I'm happy that's the case. You understand? I'm happy we have at least something to pay attention to give us a green light, whether we should be buying weakness or not. Now, the other trick is going to be the flow too, because I see it already. You see what they're buying? And this is right up Cal's alley. Like, they're buying BTU, they're buying AR, they're buying all this shit again. They're buying the commodity energy names. That's where all the real buying is. That's where all the real buying is. And that's our boy Kalanovich made that call at the start of the week. Trim some equities. Because don't forget, Kalanovich, he was a little early, but he said to buy all the high growth speculative stuff. He said they were severely overdone. He was a bit early on that call, but still, if you survived, you would have made some money. So now he's saying to sell that and buy energy and commodities, Mr. Kalanovich. But that's it's not necessarily a fear, but I think I know a lot of people out there aren't going to be happy with it. I think it's going to be more of a stock picker's game, and we may not be thrilled with the type of companies that we need to buy. Another thing, by the way, right, that you almost always, and it doesn't have to come off the lows, so I don't want to make it have to be like that. But another big sign, like for me, that a low is in and the start of a new bull trend is here. I told you guys, new names, okay? You start to see new flow in new names. You know, it's been the total opposite of that, right? The total opposite of that. They're buying DraftKings, NVTA. Do you see some of those biotechs? The moves in those biotechs? Smile Direct, Tony, Jesus Christ. You see the move in some of those biotechs? I played the one, and of course, it had the big run and halt after I got out of it. Where is it? This one, I think it is. Is it? No, what the hell's the symbol? Not NVTA, the other one. They bought right after NVTA. You guys remember the symbol? No, biotech. I forgot. Today, halted, upside halt. Oh, what am I typing? PACB. Why do I think it's a C? That was it. PACB. Oh my God. I didn't see that. Look at this. Jesus Christ. Look, guys, you see this? Do you see this? You think that's the start of a new bull market? This? You think this is the start? You think this is the start of a whole new bull market? Come on. You know, and again, you guys think it's normal. It's normal for that to happen when the chart looks like this. It's normal. Like, how about this one? Another Kathy fave, right? NVTA. Like, everyone's like, oh my God, you see the NVTA? It went from 2 to 10. 2 to 10. I remember owning this thing $50 over here. Look at this. This is not the reference I was making to when the tech bubble blew up and the small caps led. It was this didn't. I'm not talking about this. They were stock picking selectively in small caps that were profitable, real numbers, real growth rates in recession-proof sectors, not squeeze names like this. They weren't tripling in a day. DDD, that did it too. Yeah, bingo. Remember bingo? These are all oldies but goodies in the boom. Look at this. Oh my God. You know, these things are dead until the Fed implements QE again. You know what I mean? You got the potential sellers in these things is massive. That's why you get, you know, days that end up looking like this. Like, you see this day today? This is a travesty. Look at this. This thing went to 15 and closed at 7. It went from 7 to 15 and closed at 7. Yeah. And, you know, like these names, okay? Like some of these names, okay? I think that they're going to be survivors in these things, right? There's some real names in this. But the difference, I think, what's going to happen with these things is you're going to see them being bought exactly where that leap buyer somebody just mentioned on Roblox bought, okay? They're not going to buy into the hype, right? Roblox now, let's say it comes in, okay, and nobody wants it anymore. That's where they're going to buy it, right? And they'll probably be early, and there'll be some more weakness, and they'll probably add and add. You understand, with time and build a position. But yeah, this is all heavily shorted names that are squeezing all over the place. That's a bear market squeeze. That's what it does. Yeah, Carvana. That's another one, Tony. Great call. That's another one. Oh, look at this. Now, a lot of us, right, including myself, and a lot of us thought that a squeeze like we're seeing right now was going to happen like somewhere over here. You guys remember? I think I used Twilio as an example. I'll tell you exactly where, and I was wrong. I thought we'd see some buying in Twilio here, right? Or here, one of these places. Okay. And I thought, honestly, you would get a rally like this significantly. Later, T. I never seen this type of dismantling so aggressive. I can't believe my eyes on some of these things. You know, but with the Fed and everything else, these are the things that got hit the hardest. You know, these are the things that got hit the hardest. Yeah, that's what it is, Lourdes. And there's nothing wrong with it. You trade them. You understand? But that's what you got to do, right? You got to make sure you're trading them and you don't overstay your welcome, because it can be really painful. You know, it can be really painful. And there could be multiple trades in these things. Like, I give an example, Twilio, right? It could dance off this low level for a long, long time, right? And where you're buying it off a low level and trading it, but you start chasing moves in this thing, and you'll lose money so fast, especially in options. I can't believe what they did to Twilio. Like, Twilio was, in my opinion, a stud. But I guess the fundamentals changed there too, right? This thing had a big rip off earnings, right? TTD. This thing's an animal too. Yeah, that's a big move. That's a big move. But you know, look, it's notoriously it makes these moves in its sleep. Yeah, UPST. This was a hype name, right? This is a firm. Wasn't the other one a firm? Oh my God. Look at that chart. Yeah, see, this has a little lift here. And what usually happens, guys, right? Again, you don't know where the top level is, but it trades in a range. Like, you know what I mean? Remember what we were saying? Or even like this. And it trades in a range for a long, long time. And Jemima, that was one of my favorites. Yeah. Oh boy, oh boy. These charts are incredible, no? Team, this was a real name too. This still is a real name, no, Team? This is not no Fugazi, is it? They're profitable? I think they're profitable, aren't they? I thought they were. Yeah, this is a real name, Team. Plug. All these names. You know what's funny? Not funny, but Alternative Energy, they've had a nice run, right? Like this may be a hot group here. It's already hot, but something to keep an eye on, pullbacks. You know, because it's in that energy. Yeah, that's the stud, Tony, right there. ENPH. That's the stud. Oh, man. I didn't realize that. Wow. But you see how this, Tony, looked good even before this move, right? This thing looked really good. Look, like, you know, this is a constructive stock here. Exactly, exactly. They were buying dips. Exactly. Yeah, here, you know, we don't want to buy this now here. You know what I mean? You want to look for pullbacks in these things. But you know, these solar things could be in play. They could be in play with energy if energy flies. No doubt about it. Max, that's the one that I'm really torn on, because I hate the EV names for good reason. You know what I mean? But this name sees real action. I don't know how real it is. This was a SPAC, right? I think it was a SPAC. I think that's why I was turned off to it, but I could be wrong. I don't know. But yeah, there are real buyers in this. Now, again, I don't know if these buyers are going to be right or wrong, but there are real players in this. Again, I would definitely not chase green. and I would look to buy weakness. And I think you got a shot because buyers show up into weakness, real buyers. Somebody, believes in this thing. Charging stations, yeah. Maybe. I'm dying to see new names. I saw one new name called One Little Sweep today. See, it's stuff like this. You see this name? Okay, now it didn't catch anything jaw-dropping, sweeper-wise. It caught a sweep. But you see a name like this? This is what I'm referring to. Okay? None of us know it. Anybody know this name? None of us know it, right? And all of a sudden you start to see sweepers building a position, right? And then you go look and you're like, what? Wait a second. They earned $8 for the quarter. You see? This is what I'm talking about, like that. That's what you start to see a pattern of. It starts to develop, and that's when you know something's changing, right? Your funds are starting to take some risk and do some stock picking. And that's where the flow provides an edge, because I'll never find these things on my own, PBR was just block positioning garbage. Nothing we want to see. Medical, yeah. This is medical related. Some, recession proof, who knows, whatever it is. But this is exactly the point I was making with, these names, new names. Merck caught a nice bet. Now that's a defensive name, but Merck caught a nice bet today. A real nice bet. So did Pfizer into weakness. Yep. So look, the top bets, and again, for members, I'll post it when we get off of it again. But like you see some of the top sweeps today: energy, defensive pharma. There was one sweep, and I don't even know how legit it is, that I put on the top bet list, was that DraftKings. But we got to check open interest to see, if it's clean or rolls or what. This, how much money is stuck in DraftKings? We don't want to see one sweep. We want to see, honestly, like probably 30 sweeps in DraftKings before we say, oh, well, you know what? Maybe someone's buying DraftKings here. All kidding aside, one sweep in DraftKings means nothing if you think about how many longs got caught in that thing. Everybody I know in the retail crowd own DraftKings. Yeah, like Snap too. How much, you know what I mean? There's so much. It's like you have no edge in those things. You understand? Donkey Kong. And it wasn't always like that, right, Max? You remember DraftKings sweepers, they were printing money early on. They were money printers, those sweeps. But now, you don't know what's clean. You don't know what's clean. So much trapped long money in it. That's why, again, and it tells you about the health of the market and whether it's worth taking risk. You start to see names like this being accumulated. And it makes sense. It's not a short squeeze. It's not a hype job. You understand? It's just real buying, right? Based on fundamentals. Because of the Fed, especially some of you who are new, you don't even know what that means. But that's fundamentals are one of the major catalysts for making stocks appreciate, right? Not in the last 2 years, but that's what usually is the number one catalyst. So, this is a name to keep an eye on anyway. Let's see if they accumulated here. Nice little breather. Another name we've seen buying in this week, BTU, right? Which has had a nice breather. But yeah, this is energy related too, right? Coal. But this is exactly like BTU, again, We don't want to buy into this, right? This is exactly what, no, don't tell me Elliott name. How did I know that? Are you serious? It really is an Elliott name, Les? I can't believe it. That's why. That's why. Thanks for telling me that. All kidding aside, I didn't even know that. How did I know that? I can't figure out. It's an Elliott play. Jesus. That's why it's catching those good looking. It caught a risk reversal Monday, right? Monday. Caught a risk reversal. Yeah, Dom, see, but these, again, not, I'm talking about positions. This is exactly what I would buy for position. Even messier than this. Here's what I like. I like this. I like when I see the same flow we're seeing in BTU coming in here. That's what I like. You know what I mean? Death. And now we're seeing Elliott sweepers come in, and they're coming in for a reason. I can't believe this is Elliott. So now this is like the second opportunity in BTU. Those of you who were around, remember this thing caught a ton of action. You guys remember into the run, right? It caught a ton of action. So you don't want to buy into this chase. Now this is what you've been waiting for in BTU, right? Same thing. I wouldn't buy after 3 up days. Like the risk reversal was here. I wait for a pull, and especially if you see more action, this is what I would buy if you like the name. And this, this used to be a piece of garbage. Like this is real too, fundamentals, right? Yeah, look at this. Yeah, it is. You're 100% right. Technicals, yeah. This is a clean downtrend. So here's the rationale, Dom. Okay. You don't like it for a good reason, as far as technicals are concerned, because you don't, based on this pattern, you don't know whether it's going to break out or stay in this choppy consolidation, right? Right? You see this, right? The way I look at it as, and I agree with you, that's what I see. But what I see different here that I didn't see here and I didn't see here, sweeper activity. Exactly. So you understand, it's almost like it's tipping us off to a potential breakout. Now, again, it's not a guarantee that it breaks out, but it increases the odds of a potential breakout. So that's what I see. And I like it. I like even better what I refer to initial activity, where before this one even happens. So before it even comes to life at all, I like to see accumulation tipping me off that this may happen. Because it's cleaner, it's cleaner. The first sign of action before the breakout. But this is an Elliott name. Interesting. So there's the reason for the flow. Yeah, I don't really follow that. Listen, whether I don't follow that stuff, because what you're telling me has basically been an opinion throughout this whole move, right? So you could have had that same opinion over here. You could have had that same opinion over here, and you have that same opinion over here. You understand? The way I look at it is the smarter money has a different opinion. You understand? Yeah, that's Cal. Isn't that the way the game works? You know what I mean? That's the way the game works. But that's a good point. Obama was more anti-coal than anybody else, and that was the bottom in the stock. He's 100% right. Yeah. And don't get me wrong, you guys know, like, Cal is a much bigger energy player than I am. I'm not a big energy fan. I like growth stocks. I love growth stocks, obviously. But might not we might be out of that game for a while. Singer just in position BTU ST ready to reduce his stake. Oh, I don't even know, Ed. I don't know. I guess he's been in the name for a while, right? That's why we've been seeing the flow in the name all of a sudden, because it's weird that all of a sudden BTU's catching monster bets. Monster bets. But could have reduced the position. Had a big run. What else? LNG somebody posted. That's a good looking stock. Wow. That's a good looking stock. So here, where's who was I talking to? Dom? Isn't this BTU before this? Tell the truth. What do you mean now that's a chart? This is BTU to a T. No, don't look at this. This was not BTU. Before this move? Now you like it up here? Gotta wait for the breakout. Are you crazy? That's what I used to do my rookie year. Wait for the breakout. You get demolished in this market waiting for breakouts, chasing breakouts. No? Yeah, I don't. I can't do that. Again, maybe, I don't know if you talk about trades, buy it here, sell it here. But if you want to, you're looking for a move and you're looking for a good risk reward spot, I'd rather buy it here, obviously, than here. But yeah, this is a good looking name and has been. It needed this breather. Here's another one that gets tattooed. You guys know, right? AR. Now this thing it basically went parabolic, this AR. Look at this move. So then you had this rinse, and now they're buying it again here. Now they're buying it again here, AR. EQT, good call. That's another good looking energy name. Damn, a lot of these things snap back, right? Already hard. Look at this. They had nice bounces. What was the other one that caught? Oh, CVE. These are all the ones I kill myself over for not owning. Look at this move. Can you imagine? Can you imagine? And they were buying the daylights out of this thing over here, I think it was. Right? 2021. Yep, over here. They were buying this consolidation right here. Yeah, it does. Again, the only thing that bothers me is this, but LPI, that's another one. They make good money with that stock. That's a little like under the radar one. LPI, energy name. A lot of these energy names. Caught a little action today. TOU, Jim? Oh, you. I know that one, you. So what's this U? Where'd I hear this U? Oh, two? Two. Oh, wow. Oil. I never heard of this one. It trades options, Jim? Jesus. I never seen action in this. Oh, I never seen that. I don't know this name. I don't know this name. The ones they bombarded are like the Devon Energies, DVN. Any new, somebody said Tell, right? That's a smaller one, came out of like bankruptcy. Yeah, that doesn't look bad either. That was my favorite stock. Jeez. Yeah. You gotta wait for this to sell now. It was. Now it's got a lot of work to do, Max. This you. Is you? You talking about you, Max? I like you as a company, you know? I would have got demolished on it. I wanted to put it away and I would have got demolished on it. MRO, yep. They all look the same, right? These names? They all look the same. Oh, that did they? I think that had a little run, right? And then it stalled. REI. So, what do you guys think? Energy heats up again, or you think maybe just the energy stocks, even if crude doesn't heat up? MRO on Kalanovich's menu. Interesting. I like this guy too. NPC. This is a stud. Like sometimes you don't even have to overthink it. You know what I mean? You don't even have to overthink it. Like if the energy stocks are going to do well, NPC is a stud. You know, COP. That's another one. You know, these are like the leaders. Devon. Yeah. Definitely. Definitely a watch off a little rinse here. Fang. That's another one that caught a ton of flow. Yeah, look at that. It looks like the same exact chart. Oxy, because of Buffett, catches bombs every day. Every day. Next, somebody else was telling me about this, I think, next. We had seen flow in this run up next. All these things look okay, guys. I mean, I'd rather buy them, like Sean was saying, you get a little selling. Some look better than others, you know, they're not as extended. I can't Oxy, a lot of buying in that. X, see, I wouldn't buy X ever. I'd buy this one instead. And this one. Like, I don't think there's ever a reason to buy X, ever. God, honest to God, truth. EOG PDX, Ranchero, like the technical, let's see, EOG. Oh yeah. This looks like the others, the energy names we were looking at, Ranchero. EOG, and what's the other one? PDX. Which is PDX? What's the name of this company? I don't know this PDX. Paradox. PXD. Yes, of course. PXD, of course. That's a beast. PXD. I know this one. Uranium, commodities. I have no feel on any of these commodities. I'm not a commodities guy. You know what I mean? I have no feel. I know a few names that catch action in the group, but as far as the group itself, you know, I don't know the players in these things too, country-wise. Wasn't there a big thing, or was that aluminum? Right? One of these countries, Chile or shit like that. I'm not on top of this stuff. I don't know what's going on, you know? CCJ, that's the one they always play when they play uranium, CCJ. And then when they get speculative, they go URRE. Wait, UEC. Yeah, UEC. What the hell am I talking about? UEC. And UUUU. Good call, sure. You know, so those are the commodity names, uranium names. They come after when they play them. Yeah, PBR catches action. PBR catches action. The problem is PBR, there's a lot of block trading in it. So a lot of positions being shifted around, tied, crossed. But you'll see sweeps from time to time. There's been a decent amount of buying. I think they were leaps, actually, in PBR. I think they were leaps. One of you guys brought up a good name, the Tepper name. I think he cut his position, though, because it had such a big run. The one you guys mentioned before, the Tepper name, ETP, right? ETP? No, EQT. Wait. Not EQT, ETP. No. What the hell's that symbol, guys? The Tepper energy name. No, one of you mentioned it at the when we were looking at the energy stocks. Here we go again. EQT. Didn't I type that in? That's the one. This thing's a beast. And you know what the biggest moves are? These gas stocks, right? EQT, AR, right? And RRC. Those are the ones they play flow on. SWN, that's the spec play. They bought some today. This is not bad too, spec play. CTRA, I know that one too. That catches nice sweeps. CTRA. God damn, it's all these energy names catch all these nice sweeps, right? That's where all the nice action's been. All of it. Yeah, CVE we spoke about earlier. It looks good. Caught some action recently. Tell, definitely spec name. Definitely. Later, Sean. Have a good night, buddy. GT is a Tepper name? Recent Tepper name? Really? Wait, I think today, was it today? Caught a nice sweep today. Hold on. Or was it yesterday? Here's some of oh, that's not the whole list. Where's the whole list? This it? Yeah. Nope. This is yesterday. Hold on. Yeah, here it is. GT. Right there. Made the top bet list yesterday. It's a nice sweep. Nothing extravagant, but especially if Tepper's in the name. You know, again, 300 grand in Snap is peanuts, but this type of order for GT based off the liquidity and the options, you know what I mean? That's a legitimate order. You got legit players in these names, legit players, real buying. Here's the steel name, right? Nucor. Like, look at this. Real players. I don't know what the hell they're buying Cheesecake Factory here. That wasn't a bad order. Look at this guy. Leaps. So that was yesterday. Let me show you today's. Oh, you know why? I think I ran my mouth with a little commentary around it. Yeah. There's more than this. But here's the Merck bet we were talking about earlier. And there was another size order right behind it. I mean, that's a nice bet for Merck. Here's that Pfizer monster. What the hell is that? What's that all about? I got to look at that flow again when I get off of here. I mean, that's a missile. No? That's an all-out missile into weakness. You see what I mean? If this was you or whatever skills, we'd be doing cartwheels, right? But look at this. Yeah, it was down today on drug news. Even better. And remember the point I was making earlier? Like we see all these short-dated weekly front month call buying and all these squeeze names, and a lot of these things, they're out of the same day. They don't even last a day. You don't even see them in open interest the next day in this market. They're playing. But an order, a sweep like Pfizer, comes into negative news and weakness. You know what I mean? That's not a chaser. That's not a forced buyer. That's not a short getting squeezed and hedging some risk. Monkey box. Oh God, I don't even mean to laugh. But like somebody saw this weakness today and acted like Santa Claus came down the chimney off that sweep. That's a big bet. I got to look at that. I mean, Gotta buy something. I might buy Pfizer. I'm gonna look at it. What is it? November? Is there sometime there, right? November 50s. And it's defensive too, you know, if the market gets shaky. SIGA, I mean, I played it I was day trading it. A couple people took it for a swing. I didn't have the coconuts to do it. But this thing was, I wish I took it for a swing. You day traded it too? Yeah, I traded a couple days actually. It caught some nice action, as you probably know. I didn't even realize new highs today. Caught some nice action, this thing. And you know what's funny? This SIGA, you know, I talk about like the junk action. It wasn't junk sweeps. There were real sweeps in this SIGA. You know what I mean? They weren't speculative. Like, look, let me see if I can pull them up. Oh, I could do it in the room too. Look, it's like random shit it pulls up. August 4th, just that day? Why just that day? Oh, I think I know why. I got to put the dollar sign. Wait a second. Nope. Anyway, I could pull it up in the room, but I don't know, I might blow up Zoom. SIGA 25, they were 25, is that the ones? 25 calls August. Okay, see, Ryan, he's got a better memory than I do. When the stock was, when the stock was 15. Jesus Christ. Man. Yeah. Yeah, I haven't been swinging anything. Otherwise, you know, I might have rolled the dice. I would have definitely rolled the dice swing a little piece at least. I just day traded it, honestly. I didn't even think about swinging it. Yeah, I guess because the monkeypox, it's been on their list. But that's what really caught our eye, that there was legitimate sweeper buying coming in. So that's why we became interested in it. You know, if it was junk, I wouldn't have even looked at it. Kenny. Swear. I didn't never seen any. Oh, this got bought out, huh? A few weeks ago. Swear. How come I don't remember this? Can I pull it up here? Wait, Swear. Oh, I was thinking the other name. What the hell name am I talking about here? It was a sweep, really? Yeah. Twitter is useless. You know, useless? Useless. Wow. And what was it, a buyout, Cal? Looks like a buyout. Jesus Christ. Oh, there. Matt pulled it up. Look at Matt. Always clutch. September 22 and a halves when the stock was 25 on 8/11. 8/11. Oh, earnings 8/11. What the hell am I looking at? 25. So that was right. That must have been, yeah, that must have been right over here. Unless it was here. No, probably here. Damn. I don't even remember it. That's not a bad order for that name, too. 220 grand. You know, but there's been so much junk action. Who could remember all this shit right now? Oh, July 12th. So let's see. Oh, over here. Interesting. Did that thing get killed? HKD? I saw you guys talking about this name. I don't mean to laugh. People lose money in this shit. Oh my God. Jesus Christ, yeah. What they do to these poor souls. I honestly, I've been in this game a while. I'm God's honest truth. I don't know if I've ever seen a stock go to 2,600. Honestly, I've seen some, I've been through the go-go days of the internet boom. I've been through a lot. I've never seen a stock go to 2,600. It was record setting, huh? Honestly, I can't remember anything close. There were internet names over time, split adjusted, stuff like that, but not like this. This is insanity. Like, there's got to be people going to jail over this. I don't know how did this happen? China name too? There's something really criminal behind this. Chinese money laundering scam. There you go. Was it a $200 spread? Oh my God, Dom. That's insane. Yeah, I can imagine. I can imagine. Jesus. Yeah, you can't fool with these things. You can't fool with them. I mean, GameStop is like a blue chip compared to this. Look, GameStop is, you kidding me? All GameStop's got to do is pay a dividend now, and this thing is best stock on the board. Seriously, it's like IBM. It's like IBM, you're right. Cow. Oh, Jesus. All right, ladies and gents. So that's the story. All right. Two things we want to see is we want to see how things, when we do get weakness, and we're going to get some weakness. It's not going to be up every day, even though it looks like that right now. We want to see if the Fed goes back to their normal, usual rigging process, right? We got a couple of things we can look at. And again, just as important, we want to see if they do some stock picking into weakness, because it'd be telling. But, the squeeze kind of got in the way here a little bit with earnings. I think we're starting to see that anyway, this stock picking. I think we're starting to see that, we're starting to see that. It's not all just squeeze stuff. Like, if you look, I've been trying to throw on the top bets list only those type of, real buying. GT, Nucor, Pfizer today, Merck, so it's not going to be that always the names we want to see there, but we got to keep an eye on it. Okay, because that's our out. Even if the market is choppy, we can find some alpha in individual names. Oh, is that what happened? I played it, Kenny. I played this PAACB for, honestly, it was a quick scalp, because what happened is they swept this NVTA, and then it looked like they were going into that. But somebody got blown out of a short, huh? PACB? Interesting. Yeah, Cal, if I see anything more on this Pfizer, I'll tweet it out. I'll put it on my personal Twitter, so anybody who's not a member, just in case it's anything important. But I'm definitely going to take a look into that, because that's a monster bet. Even for Pfizer could catch size, but that's a monster sweep. Yeah, exactly. That's why I even, interested even more, because of into negative news and weakness. And, if the market does get dicey, these things hold up, right? They sometimes even do well. They're defensive. Look at Merck. Merck's been okay. So, but I'm going to take a second look, just to see if I missed any other orders around it or anything. I'll let you guys know. All right. Thanks everybody for stopping by. Enjoy the rest of the night. I'll see most of you mañana. Tomorrow's Friday already. Have a good night, everybody.